As 2025 draws to a close, a major transformation is on the horizon for the financial lives of millions of Americans. The end of the year marks not just a new calendar, but a turning point in how families, workers, and businesses will manage their money. In 2026, a sweeping set of tax law changes, often called Trump's One Big Beautiful Bill, will take full effect. These changes will touch nearly every paycheck, tax refund, and business plan across the country. Whether you're an employee, a small business owner, or someone planning for retirement, you'll feel the impact. These aren't just minor tweaks or small adjustments. Instead, you should prepare for some of the most significant shifts in personal and business finances in recent memory. Many households will need to revisit their budgets, and businesses will have to rethink their strategies. The Tax Cuts and Jobs Act of 2017 introduced a range of temporary provisions for individuals and families. Now, with the new law, many of those changes are being made permanent, locking in a new era of tax policy for years to come. Lower income tax rates and a larger standard deduction are here to stay, offering more predictability and stability for your financial planning. This means you can plan ahead with greater confidence, knowing that the rules won't change from year to year. New tax breaks are also being introduced, specifically targeting workers who earn tips, those who work overtime, and seniors living on fixed incomes. The goal is to put more money back into the pockets of working families and retirees, helping them keep up with rising costs and unexpected expenses. For business owners, the changes are just as significant. The lower corporate tax rate is now permanent, and incentives for investment, research, and development are being restored. This could mean more opportunities for growth, hiring, and innovation in every sector. In the next sections, we'll break down exactly what these changes mean for everyone, from local shop owners and employees to multinational corporations and retirees. No matter your situation, understanding these updates will be key to making the most of your money in 2026 and beyond. The most direct impact: your income tax rates. The lower individual tax rates from 2017 are now permanent, preventing a tax hike in 2026 and providing stability for your take-home pay. The larger standard deduction is also extended, simplifying tax filing and offering a substantial break for most households. For the wealthy, the estate tax exemption rises to $15 million per person, affecting only a small number of households. The alternative minimum tax (AMT) exemption is expanded, so fewer families will have to calculate taxes two ways. These changes mean more predictability and less complexity for most Americans. The law's focus is on making tax filing easier and keeping more money in your pocket. Whether you're single, married, or head of household, these provisions are designed to benefit you. The result: a simpler, more stable tax landscape for millions. The new law introduces targeted relief for workers and seniors, aiming to ease the financial pressures many Americans face today. With the rising cost of living and ongoing economic uncertainty, these tax breaks are designed to provide meaningful support where it's needed most. For service industry workers, there's a significant new benefit. Up to $25,000 of tipped income can now be exempted from federal taxes each year until 2029. This means that waiters, bartenders, and others who rely on tips will see more of their hard-earned money stay in their pockets. The exemption gradually phases out for those earning over $150,000, ensuring the relief is focused on those who need it most. Overtime workers also benefit, with up to $12,500 in overtime pay now exempt from federal taxes. This temporary measure, which also phases out at higher incomes, recognizes the extra effort put in by those working long hours to support their families and keep essential services running. Seniors aged 65 and older are not left out. They now receive a new $6,000 deduction, providing extra breathing room for retirees living on fixed incomes. This deduction is available until 2029, helping seniors manage everyday expenses and unexpected costs. These benefits are designed to put more money directly into the hands of those who need it most, whether it's to cover groceries, medical bills, or simply to save for the future. By focusing on tips, overtime, and senior income, the law addresses real financial challenges for millions of Americans. It recognizes the unique struggles faced by workers in service industries, those putting in extra hours, and seniors on limited budgets. These are not broad, across-the-board tax cuts, but focused, immediate boosts for working-class Americans and retirees. The goal is to provide targeted help that makes a real difference in people's lives right now. For those who qualify, these changes mean more money for daily expenses, savings, and peace of mind. It's a chance to catch up, plan ahead, and feel a little more secure about the future. It's a new approach to tax relief, targeted, practical, and timely, offering hope and tangible support to millions of Americans as they navigate today's economic landscape. Homes and cars are major expenses, and the new law offers relief for both. The SALT deduction cap jumps from $10,000 to $40,000 until 2029, helping homeowners in high-tax states. This restores a valuable deduction and makes homeownership more affordable for many. There's also a new deduction for auto loan interest, up to $10,000, if the vehicle is assembled in the U.S., also temporary. This encourages buying American-made cars and supports U.S. jobs. Deducting car loan interest can lower your taxable income and reduce your tax bill. These changes target real household costs, easing financial pressure for families. The focus making homeownership and car buying more attainable. It's direct relief for two of the biggest expenses Americans face. Small businesses get a major boost under the new law. Owners of pass-through businesses can now deduct up to 20% of qualified business income, reducing their tax burden and freeing up capital. Full expensing for equipment purchases is back, allowing immediate deduction of the full cost of new machinery or technology. This encourages investment and growth, making it easier for small businesses to expand and hire. These provisions provide direct, practical benefits to millions of entrepreneurs. The law signals strong support for small business innovation and competitiveness. For many, these changes could be the difference between surviving and thriving. It's a clear win for the backbone of the American economy. Large corporations see fundamental long-term changes. The 21% corporate tax rate is now permanent, giving companies certainty for long-term planning and investment. Full immediate expensing for US-based R&D costs is restored, encouraging innovation and technological advancement. Interest expense deductions are now based on EBITDA, allowing companies to deduct more and making borrowing for expansion cheaper. Supporters argue these changes will drive domestic investment, job creation, and economic growth. The law aims to keep U.S. businesses competitive globally. These provisions are designed to fuel innovation and expansion. For big business, the message is clear: invest, grow, and create jobs in America. The result: a more attractive environment for corporate growth. Let's see how these changes play out for real people in everyday situations, across different walks of life and stages of life. Imagine a family of 4 earning $90,000 a year. Under the new law, they avoid a tax hike and keep more of their hard-earned money each year. This is possible thanks to permanent lower tax rates and a larger standard deduction, which means less of their income is taxed. With these savings, they can put more toward their children's education, family vacations, or even just everyday expenses, making life a little less stressful and a lot more secure. Take a restaurant server who earns $30,000 in wages and $20,000 in tips each year. Now, all her tips are exempt from federal taxes, dramatically increasing her take-home pay. This change means she can finally start saving for emergencies, pay down debt, or simply enjoy a little more breathing room each month. For workers in the service industry, this is a game changer that rewards their hard work. Consider a senior couple, both over 65, living on a fixed retirement income. They can now deduct an extra $12,000 from their taxable income, lowering their tax bill and easing financial stress. This extra deduction helps them cover medical bills, home repairs, or simply enjoy their retirement with greater peace of mind. For small business owners, the benefits are just as real. A contractor who buys a $40,000 work truck can now deduct the full cost immediately, saving thousands on taxes. This frees up cash to invest in new equipment, hire more workers, or expand the business, fueling growth and creating new opportunities. These examples highlight how the law delivers tangible, meaningful benefits to families, workers, retirees, and entrepreneurs from all backgrounds and professions. The changes aren't just numbers on a page, they translate into real dollars in real pockets, making a noticeable difference in daily life. For many Americans, this means greater financial security, more opportunities to plan for the future, and the flexibility to handle life's surprises with confidence. The impact is personal, practical, and immediate. helping people not just get by, but get ahead. Supporters say these tax changes will fuel economic growth by letting people and businesses keep more of their money. Lower tax rates and incentives for investment are meant to boost spending, job creation, and productivity. Full expensing for equipment and R&D is seen as a powerful tool for business growth. Critics, however, argue that the biggest, most permanent benefits go to corporations and the wealthy, while relief for individuals is often temporary. There are concerns about rising income inequality and the national debt, as these tax cuts are expected to add trillions to the deficit. Higher debt could mean higher interest rates, making loans more expensive for everyone. The debate centers on whether short-term growth outweighs long-term fiscal risks. The law's impact will depend on how families and businesses respond, and how the economy evolves. The stakes are high for every American. So, who benefits most from the 2026 tax changes? Large corporations and wealthy families gain permanent, substantial advantages. Working Americans, especially tipped workers, overtime earners, and seniors, see real, if temporary, relief. Homeowners in high-tax states and small business owners also stand to gain. However, renters and lower-income workers may see less benefit, and many individual breaks expire in 2029. The law creates a landscape where corporate cuts are permanent, but relief for families is time-limited. Understanding these changes is crucial. They'll shape your finances and the economy for years. Stay informed, plan ahead, and make smart decisions for your financial future.